Let's take it to actual trading. We're looking at the hourly time frame. Again, we're seeing splatter momentum. The label is here now all correct. We have a 1 and a 2, internal 1 and a 2. All this is a 3. We're quite sure of this right now, with an internal 2 and an internal 4 at that point, and divergence. We finished 3 apparently. At that point, we were going to, I believe that 3 shifts back here. And of course, we have a 4 at that point. Oh, at this point, we'll have to rectify this when we go live. We're doing 5 into 3 before we do a correction 4, and then we'll move higher into a 5. This rounds up. Rounds up leg A, and then we get to do leg B. So this means that the current move can take us going into Thursday all the way to 1.09 and 1.0960. If we get any negative momentum due to dovishness regarding the euro on Thursday, it's just a wave 4, 4A, 4B, and 4C. And we get to do this flat formation inside of the ending diagonal before moving higher. It also means we could then safely take the long, probably all the way to 1.0960. We're looking actually at the right correction. At the right labels. We have a 1 and a 2. We have an internal 1 and a 2, internal 3 and a 4, 5 into 3. Just that 4 ends up here, and we were still expecting another retraction to the downside, do 4 before we break out into a 5. Again, because of the splatter momentum that we're seeing on the 1 hour chart. The ECB is going to be the primary fundamental impacting the market, we believe, to the upside. So this was the bullish projection. If we have, there was another projection that the market will just stay stuck at 1.0870, that level. We are now, of course, at 1.0870 and 1.0890. All right. Remember, we believe we're still doing a wave 4 or a higher degree correction. If we're doing a wave 4, we leave the accelerating ending diagonal, move deeper into a broader ending diagonal, a more, let's say, macro ending diagonal. We have a 3 here, of course, so we have 4A, 4B, and 4C. If Christian Lagarde again is bearish on Thursday, we test level 1, 1.0744, 1.0750. It's a shoulder level. It's actually our best entry. So we may consider, if we already done the long with the sterling dollar, you don't really need to do the long with euro dollar because one is going up, so the other will follow suit. All right. However, if maybe the sterling dollar move will not take us all the way to 130 or 129.50 and the market retracts, then the euro dollar and sterling dollar retracts, then euro dollar will also retract. And if euro dollar retracts, we buy a level 1. 1.0750, 1.0760, 1.0744. Adjust the level 1 inside of a broader ending diagonal. There's still shoulder levels, meaning we get some kind of a complicated 4A, 4B, and 4C. It's an entry long. We do a 5, end of leg A, and then we do another B. Again, the primary driver is going to be the EBC, but this time to the downside, the EBC meeting. And we are seeing splatter momentum. Splatter momentum means you're moving inside of a triangular structure. It can be a broad triangular structure, like a dashed gray showing here, or an intimate, more compact ending diagonal, like the smaller one inside. Takes us, of course, now to trade management. This is what we're going to be seeing when we go live. Remember, we finished the 3. We were thinking we're done with a 4A, a 4B, and a 4C. This time the label is placed at the right level. This is what we take live. I believe market has broken out to 1.0880. We're at this point. If we have a trigger, we're looking at the 30 minutes. We have a trigger. We have, of course, a 1 and a 2. We have an internal 1 and a 2, 3, 4, bounced out of a level 1. If this is correct, the market is a go. The hedge is just below level 2. Everything is perfect. As a matter of fact, is all right. We're bouncing 200-point moving average. At this point, we're having a trigger on the 15 minutes. I believe we will get to see it again. We shouldn't be concerned that we're having negative momentum on and off, because of course we are moving in an ending diagonal. We know we are moving in an ending diagonal and in a wedge. So we are moving in multiple ending diagonals. So you must see negative momentum. And negative momentum in that case is a buy. Remember, all this pertains to what we're showing on this integration or cycle addition. If we are, of course, in an uptrend like this one here, and you see negative momentum, of course it's a buy because you're at this point in the trend and the market can move higher. All right, so let's take it live then. We are seeing a trigger on the minutes, not on the hours, but on the minutes. Like I was saying, if you see negative momentum on the hourly time frame, it's no problem because we are in a triangular pattern. If we are in a triangular pattern, we must be seeing negative momentum. This is a reality. I mean, this is correct. We should be buying negative momentum. All right, let's take it to 30 minutes, do the labels. Bear with us a second. Bear with us a few moments. Just a few more moments. All right, so we're seeing splatter momentum, and inside of a triangular structure, like as we keep saying, you always see splatter momentum. But the triggers, this is what we need to focus on, must be that we buy negative momentum. Must be if you see positive momentum, we do not take a breakout trigger, because inside of a triangular structure, this is an exhaustion trigger, meaning the move is finished and we're going to get an internal retraction. And therefore, an internal retraction, we have to wait for it and buy into it. We can see all the labels here, 1 and a 2. We believe we're doing a 3. There's going to be a 4, which is going to bounce level 1 again. Should be seeing 1.0840 one more time, maybe even 1.0830. We are either moving in this broad ending diagonal showing in dashed white, or we are moving inside of this more accelerating ending diagonal. It's always important to have two versions so that when there is a breakout, we are aware immediately of the extent of the move and why there is a breakout. We're seeing now double inverted heads and shoulders, of course. So I don't believe we need momentum anymore. Just focus on the pattern structure. Again, it's a double inverted head and shoulders. We want to buy into it, and this one should take us to the target levels this week on a bullish euro going into the ECB meeting. Okay, so you can see inverted heads and shoulders. The shoulder level is as low as 1.0840. This is really the best entry. And you can see here that we have a schematic green line moving higher, showing that if we get a bounce at 1.0843, it's 23.6%. You'd want to take fibs. Bear with us a second. So I was using fibs from leg 2 to leg 3. Retractions, of course, take us to 38.2%, 1.0840. But I believe because we're moving in a series of ending diagonals, you want to take fibs. You want to make sure that you get the best entry on strong volatility because of what's coming in on Thursday. So I will consider there's a 1 and a 2, 3, 4, and a 5, and this is some kind of a higher degree 1. We can do this. And therefore, at that point, we would want to measure our fib retraction for the full 5 swing move. At this point, 38.2% takes us to this second shoulder level. We would consider it's double head, but it could become a head and double shoulders. So that second shoulder level can take us to 1.0830. It is the lower boundary of the primary ending diagonal. We expect there's going to be volatility both ways on Thursdays, so would rather stick with that level. Right, and let's insert now the pivots. We're looking at 1.0830 and 1.0840 already pivot level this week. This is a 30-minute chart or just like a 1-hour chart. So the pivot level is what should be seen on a weekly basis, and therefore we would go for 1.0830. I don't believe it is prudent. There's also, of course, it is prudent to go to 1.0820. We're seeing here 1.0812. It's usually, we have a lot of volatility that day. It's possible to go all down to 1.0825. Again, it's that shoulder level. We're just looking at the shoulder level here to the left. All right, and therefore we stand down, meaning we don't buy market. We wait for that retraction. We buy the shoulder level. Best entry is going to be 1.0824. At this point, of course, we are going into a very volatile fundamental, probably very volatile fundamental activity on Thursday. So the stop bear with us a second. Seeing, of course, something like a rounding bottom. Again, it's double inverted head and shoulders. The stop needs to be below level 1, to be below the head altogether. 1.0750 appears to be an excellent choice because 1.0750 is very close to support 2 on the hourly time frame. So the hedge we can take down to 1.0750. Is showing here at 1.0747. The entry is going to be 1.0825, and we are going to be taking this to resistance 2 this week during Christian Lagarde's press conference. 1.0924 is resistance 2. Midway is also between resistance 2 and resistance 3, 1.0967. All right, so to recap, we would consider to do an entry long euro dollar into euro dollar going into the meeting by the ECB on Thursday. The best entry over here is showing at around 78.6%, 1.0830. I believe we definitely get it even during the event itself. We probably have done a 1, we get to do a 2, and then we get to do a 3, 4, and a 5 into that 5 into 3 before we do high degree 4. The targets are going to be 1.097 or 1.096, midway between resistance 2 and resistance 3. And the hedge, the protective hedge, is just below leg 1 because we are, of course, in a leg 4. And it's going to be a very volatile day, so maybe we still have more corrections. Below level 1 is really 1.0750. Is really that. Below a typical leg 1, it's 1.0720 or 1.0730, so it's 100 points at this point, if you wish, but I doubt that we are going really to fall below internal leg 1 here at 1.075, 1.076. So 1.075 is something like 75 points of risk.